TraderInternationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the TraderInternationalInvestor.com's Daily Brief. So that sounded kind of weird. Sorry, everyone. But thank you for the helps there, Chris. Actually, we don't have anybody knocking on the roof here today, but it'll be interesting to see. This will be a good test. If all of a sudden the hammering starts, then we know they're trying to send us a message. So I'll try and keep the tone relatively flat here today, so Zoom doesn't cut out my craziness. Anyway, hello everybody. Good morning. It is a couple minutes past the top of the hour here, 9:03 on the West Coast, Tuesday, 23rd of July. So, oh, well, that was a fun month. Hope you enjoyed that. That sure disappeared quickly. One more month until end. And if I'm not mistaken, I think isn't the Fed meeting on the 29th, 30th? I think that's the case. Could be mistaken about that. I don't know. Oh. Feeling a little bit discombobulated about that. I think they're meeting at the end of the month. And of course, they have their wonderful party up at Jackson's Hole. Usually they have some sort of polite statement about what a wonderful job they've done. So keep an eye out for that as well. Having said that, I don't actually think, and probably it serves the banksters' interests, but I don't think people are actually thinking too much about interest rates right now and Fed and stuff. I think if you are a warm-blooded U.S. citizen, you're probably quite concerned about whether a coup d'etat just took place in your country. Sure feels like it. Sure looks like it. Well, looks like a duck, quacks like a duck. Must be a coup d'etat. Anyway, so I don't know how you feel about it. Chris, what do you think? You happy that Camilla is now your dear leader? I don't know whether that resonates with you.
I have nothing great to say about that situation, so I will
Okay.
keep my comments to myself politically.
Well, and probably Chris, probably best that we just refrain from including him. I'll sink my own ship, but we don't need to sink Chris's ship too while we're at it. Anyway, yeah, kind of a screwy market state, no doubt about it. I will say one thing though. I have said repeatedly, and of course, the Beamish, if you've taken any of my educational programs that I've put together, these 3 different courses that we offer at TRI. One thing I definitely drive home are these fear greed cycles. And we are officially, almost 6 years into this current greed cycle. So seeing the stock markets move up the way that they are shouldn't surprise us. We've all seen repeatedly, and of course I can always display it again, but yeah, I show you pretty often. You guys know what I'm talking about. The similarity between this particular cycle and the 1940s, and of course the resolution coming out of the 1940s, the stock market went absolutely crazy. And I wouldn't be surprised if we see the same thing. It's not really that stocks are so much more valuable. It's that these currency things, this fiat nonsense that we use, is so completely and utterly worthless that prices of everything, eggs of all things, bread, milk, gas for your, I guess your non-electric car, if you still drive one. Everything's just going up and up and up. Rents, house prices, right? And it's not really a function of the assets being more valuable. It's a function of these bankster crooks completely mortgaged us into the ground. And of course, the only solution to this is just keep printing more money. But anyway, you all know that rhetoric. Nothing new there. But what is interesting is that theoretically we are now into the commodity bear cycle, if you will. I think that some commodities are still going through the process of being sort of repriced into this new era, new world order, of course, that they've created for us. So those kind of commodities like the metals and stuff like that, they're at the back end of the commodity curve. They usually move up last. But energy prices, the front end of the curve, I actually think that they've topped out. And we should be expecting to see that market trend lower for probably the next, solid, probably at least the next 10 years. So we did see a pretty big meltdown in crude oil prices this morning, and I can't see that stopping anytime soon. In fact, maybe we can show you what I was looking at this morning in the crude oil. Just to give you an idea of what it is that I saw on my screen. Where is our daily crude? I think I have it over here. Of course, it's bouncing nicely. We just actually banged into one of good old Johnny Hoagland's levels. Not a big surprise to see some back and forth here. But what's interesting is last Tuesday, actually, we had the breakdown in the crude to the M top. And then Wednesday, we had a counter trend rally. And I was kind of like second guessing myself, going, oh, maybe I was early. And then crashing lower here. We have banged into 200 SMA on the daily charts here on the crude, and of course one of Hoag's levels, and also a daily horizontal support and resistance level. You can see these lows in here. So I do think we're probably going to find some support around this level in the near term, but sure looks to me like the target should be somewhere down against these lows, and that was a V bottom. So at the very least, we should see it tested. Gaps should be filled in. Foggenbaum should be traded to, blah, blah, blah. And then, of course, if we actually see this thing go and confirm massive, like weekly bearish structure, then, put a fork in her, she's done. I would say before that actual event happens, I think there's the top end of your range. That gap will probably act as a ceiling in price. And there's the bottom end of your range. That gap will act as a floor in price. Oh, what a surprise. That's right up against a trend line. So in this kind of environment, this should be actually pretty friendly for things like the bonds and interest rates. And I suppose probably the best place to show you that would be over here, maybe. I did notice that interest rates, the bond, I was a little surprised to see the bonds actually came off a chunk yesterday, and I was kind of like, what the hell's going on there? But the bonds seem to be reacting well to this falling energy market, and they're moving up, which means our inflation deflation gauge should be relatively happy. It doesn't look like it's going great gangbusters. If anything, I think we've talked about this recently, that it really looks like we're in some sort of triangle consolidation, and this is getting tighter and tighter and tighter. And probably if you do see that crude oil break through those lows, then that probably points towards more deflationary pressure. Sad part about our society, though, everybody's up to their tits in debt. That's exactly the way the banksters want us, financial slavery for the rest of your lives. But the problem with that, of course, is that you can't make your payments if you have no job. So if we do actually start getting into a deflationary spiral, prices are falling, which means that there isn't, that much of a, growth in the economy. You might even start to see asset prices fall. You bet your bottom dollar the Fed will step in there and put the kibosh on that deflationary pressure just to make damn sure prices keep moving up. So unfortunately, this is kind of a world where I think, in this inflation deflation gauge, as long as it's sitting a positive number, that actually still implies inflation in the system. And I think at best, we just simply call this disinflationary pressure. That's about the best way to describe it. It is interesting to see in my country, China, the rhetoric for the central banksters to cut interest rates is just over the top. Of course, we've got a horrific housing bubble that needs bursting. You can't have a society where people can't afford to buy a home. So the long and short of it here is they're not letting wages go up. And with all this mass immigration in my country, and also to a certain degree down in the States, but not nearly as bad as this place. All these low skilled immigrants coming in, they're filling in all the jobs that basically are vacant because locally relatively well educated, relatively high standard of living citizens, they don't want to work for crappy wages. And if anything, if they didn't bring in these immigrants, then you'd have basically more inflationary pressure through wage pressures. So we're in a really, really bad situation here, no doubt about it. And unfortunately, China is a commodity nation. And you can see, I mean, Australian dollars in the same boat. Russia's in the same boat. Russia decided to go and murder a whole bunch of people in their country next door as trying to solve the problem. And I don't think it's done them any favors. And if you hear the story really out of any commodity country around the world, it's pretty grim right now. So anyway, point of the matter here is I do think that the oil is leading. Energy does act as a leading indicator in the space, and in a weird sort of way, that actually should prop up the stock market and be sort of like the backbone of why we're going through this greed cycle and why stock prices are moving up, because all that money that was pumped into energy, or no pun intended, can actually get redirected towards things like investing in technology, which will improve productivity, which will improve profit margins, and the story just plays itself out. On the econ front today, I think, the Fed policy, keep in mind, that was a historic rise in short-term interest rates. So I think it is now starting to bite seriously. Of course, the housing market itself was one of the big bugaboos of this recent sort of, bout with inflation problems. And the econs coming out today, U.S. existing home sales fall the most in nearly 2 years. I mean, 2 years isn't really that much of a data set, but nonetheless, I do think that we are starting to see this kind of data bite, and in a weird sort of way. Ironically enough, from a stock market perspective, that'll probably help the stock market. This is going to be one of these kind of things where what's good for Main Street is not always good for Wall Street, but in this case, what's bad for Main Street is often good for Wall Street, in that maybe the Fed will actually start thinking about lowering interest rates. So we'll see how that goes. You have falling energy prices. If energy can start seriously trending and breaking through those support levels I told you about, then I think that the inflationary pressure from the commodity sector will abate. And of course, if you have broader economic measures, things like home sales, and I think I saw, unfortunately, retail sales, though, still pretty strong. So I'm sure that, this number here, the Johnson Red Book, this is supposed to be sort of like your retail sales gauge. Nobody ever uses it anymore. It's kind of surprising. My hunch is it'll start coming into favor and then people will start using it again. But right now it's relatively out of favor. So you can see that, flat retail sales, this is basically the economy stalling out. You can see retail sales started to work their way back up to pretty impressive annualized rates. Like, remember, this is at this level. This is where Mr. Druckenmiller's like, you're going to destroy our economy, you stupid idiot. Stop it. And of course, the Fed started to, crank interest rates up. And indeed, that did calm the consumer down. Consumer seems to feel as though they've gotten a bit of wind at their backs. If anything, I think that the Fed would like to see this calm back down here. Remember, you've heard Jerry talk repeatedly about how the first part of 2024 the inflation numbers were coming in a little bit hot, and as a result, they couldn't think about lowering interest rates. So I would, if I was a Fed hawk, and if I wasn't, and it's fascinating how nobody in the public's talking about this. But if I was an inflation hawk and I was watching the Fed really closely, you want to see this actually start to trend lower in earnest. Up in China, the retail sales numbers have broken appreciably. But I wouldn't compare Canada and the United States of America right now. They're pretty much apples and oranges. And really, I would even say that probably the Fed wants to see retail sales get back down into that sort of 2-3% neighborhood before they can really start thinking about lowering rates. I mean, that's 4.9%. You can't lower interest rates with 4.9%. That's way, way too hot. So anyway, this might be a data set that if you are a Fed watcher and you like following the interest rate policy, this might be a data set that's probably worth your while to keep an eye on. And really, we want to see, as I said, Mr. Druckenmiller, when they had the retail sales 20% annual increase kind of stuff. I mean, this is the hyperinflation. If anything, I'm actually kind of, I don't know whether proud's the right word, but I'm impressed that the United States of America has had the balls to stand up and actually exert some, and I guess in this case, monetary responsibility. Remember, in my country, there is no monetary responsibility, and they're all crack addicts. Everybody in this country of China, there's only one industry, and it's this housing industry, and they're all dependent on it. And every single politician is trying to strong arm the central banks. But I've actually told people, and if you want something, write this down as a really handy reference. Whenever you have one particular sector represent more than 30 to 35% of the economy, you're in a bubble, and that bubble has to pop. You cannot have one sector of one economy be the entire economy. You just can't do it. And basically, the housing industry here in China is, about 30-40% of the economy. And what's really scary is literally 55% of the economy is government. So you have a housing industry that prices are just way beyond affordability. Nobody working can actually afford to buy a house in the country. House prices have been bid up so much, and that orgy of excess has just gone on ridiculously. It just keeps going and going and going. And the whole economy is dependent on this bubble continuing going. And we all know, as good economists, that's just not sustainable. At some point, the damn thing's going to pop. Anyway, you've heard the rhetoric from me 100 times. In fact, actually, I think even a tweet that I put out recently, you guys all, of course, know the, and I'm not sure where I have the link, so I'll just load this up quickly just to show you. I mean, you guys all know this image from the crypto space, all you longtime watchers. But I need to remind Canadians, my fellow Canadians, that this works also too in things like any kind of bubble. And my hunch here is the Canadian real estate market's right about here right now. It's just teetering. It's incredible how, and we're just going through the best part of the season. What we have to look forward to now is actually the not good part of the season from a seasonal perspective. Anyway, blah, 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 blah. Brian, he loves to bitch and complain about how the politicians have completely destroyed his country. Business as usual. I suppose, we talked a little bit, of course, about the crazy political situation down in the States. It's kind of sad that now these kind of memes are out. Nobody can seem to find Mr. Biden. And listening to that Kamala Harris event yesterday was just, that was terrible. It did not sound like a guy who's sick with COVID. And the scuttlebutt is that actually he's dead. So anyway, we'll see how that goes. Can't write better fiction than reality, though. Remember we said last week, Mr. Trump obviously dodged a bullet there, literally and figuratively. Now he's up against Ms. Harris. Is this what the election's going to be now? And it is interesting to see that the Democrats and all the left, they just seem to have gotten like a second wind because of this. I'm not quite sure if it's justified or not. Be interesting to see how a debate with Miss Harris and Mr. Trump goes. Let's see if she has some kahunas. Only time will tell. I suppose also too, right now we are going through earnings season. So kind of a lack of like heavy hitting econs today. As I showed you a couple sort of minor numbers that came out. But actually, I was given this really cool website yesterday. Try and help follow our earnings. You can see there's a whole bunch of big boys here that are reporting today. So we'll see how that goes. This is, I guess, before the bell, Coca-Cola, all those kind of names. And then after the bell, good old Goog. And of course, your friend of mine, Mr. Allen's stock. So we'll see what happens there. And if I'm not mistaken, I think tomorrow there's some pretty big heavy hitters as well. But we're sort of in the thick of earnings season. And I think this is probably the predominant theme of the market right now. As I said earlier, seeing a lot of sort of disinflationary pressures out there. I don't hear about any earnings bombshells like, oh my God, this company missed dramatically. So probably the path of least resistance is up here, not down. So probably keep your eyes peeled for that. Then obviously, being a crypto oriented community to a certain degree, although I'm not doing a heck of a lot of crypto, although I am having some fun in Solana land, but checking in on the crypto story. Obviously, there's really only one major story today, and that is all about a good old Ethereum here. Ironically enough, we still have this funny little short setup working here off of this double top. Took half the position off at 2-1. Stop is at scratch on the remaining. It's still up a couple $100 here. And do we go and actually M out here? Is this one of these buy the rumor, sell the news scenarios? I don't know. Only time will tell. Stop is at scratch on that position, so there's really nothing to do there. If this does resolve bullishly, and I have said recently, I wouldn't fault anybody who did take this bot here. We haven't really moved up a heck of a lot from the entry level. So heck, I suppose if you did like this idea, you could join the bullish trade. Just as I've said recently here, don't fall in love with this. If this thing actually does start to break down and we move through 3364 here on the spot market to 3360, let's call it, just nice simple number. Then the bullish thesis is off the table and you better watch out. And why? Of course, because now exchange traded funds have now been listed for Ethereum. Chris actually gave me a whole list of them. I've got all the Bitcoin ETFs, and you can see they're not very happy here today. I will go and add all the Ethereum ETFs here, and we'll see how they fare here in the near term. They always say, actually, that these things usually come out about twice what their intrinsic value is. So this thing hit the market. The open there was 29.55. It's called the better part of $30. So believe it or not, I would actually say that value on this thing is a long way down, probably somewhere down in that area there. We'll see how it goes. Only time will tell. But the point of the matter here is we're finally here. Is this a buy the rumor, sell the news? I guess only time will tell. As I said, this short still technically is working. And if we do trade through this low here, I would even say whatever this lowest low is, the ETF is floated. They brought it out at the market right there, probably. We've sold off a little bit in the spot market. Does this go and M out? And I would just simply say, you see the market below 34.26, it looks like. I would be like, well, watch out. The bot level will give you a little bit more room, but if that M comes in, I would be skeptical of further rallies. Looking at the corn, been watching this diamond-ish pattern develop. I'm not even quite sure if I'm allowed to call it a diamond. Remember we had that big dump, and that was on I think news that actually I think it was on like a whole bunch of Ethereum move from one exchange to another. Counter trend rally to new highs. I had thought maybe when I did the weekend broiler chicken show that that was our diamond, and I said in the show, well, I'll adjust it as we go. We find it interesting that we did go up and trade two new highs on the Bitcoin right up against primary trend lines. And then we went and put in a big fat ugly M and have broken down here. The way that I would describe this is the bear now has the ball. And of course, this is an hourly price chart. If we get a trade through this low, that'll be an inside bar failure, which will be more bearish anecdotal evidence. Fog and bombs, chaos theory. I like a revisit of these lows down in here. I also kind of like a revisit of Colin. Actually, we should probably ask Colin if he wants to come on a Friday show, talk to our community a little bit about what they're seeing over in his playground. But I do like the idea of us maybe coming back down, revisiting Colin and the pump chaser zone. I would say in the near term, if this, well, that M is in there. So because that M is actually in there, I wouldn't actually fault anybody being short off of that with your stop up at new highs there and maybe looking to take some partial profits on the dump against these lows. Move your stop to scratch on the runner and just see where the hell this thing takes you. And in a weird sort of way, kind of looking at this pattern, to me, this kind of looks like left shoulder, head, neckline, and then we'll come maybe do something along those lines, hit foggy buggies. Then we'll roll over and we'll ask whether this is actually a top and we could go either way here. I've seen over time, this can break either up or down. If you did take that short off of there and we did dump into the neckline, then you'd have the risk-free position on. And if we rally back up, you get stopped out at scratch on the runner. But, maybe we come up here and then down we go. You just don't know in this game, right? We're statisticians by trade. That's what we do. So what I would just simply say is everybody's been waiting for this big Ethereum event. It is now here. What's the reason to buy now? And I don't know what the answer to that is. One good thing, though, is, of course, we do have what I would consider probably one of the best crypto analysts you could possibly find on these interwebs. And I don't know how the hell it happened. I think Spirit literally brought him into my life. But he is TRI's chief technology officer. And the genius behind the platform and the signaling system. And I won't get into it in the free show here, but every single day now I get my TRI dashboard report, and I would highly encourage all of you to seriously consider subscribing to this service because it's so beautiful to see it in action now. This happened to be not too many signals, and I like that. All right, we don't want tons and tons of signals. We want just good-looking signals. And you tell me, moving average sandwich. Look at that RSI. My goodness, that's actually that's the DI. That's not even the RSI. Beg your pardon. That's my actual proprietary timing signal system, the Delacour Index. And look at that. Well. And then, of course, what letter of the alphabet do we have here? I mean, I take this trade every day of the week. So, I mean, it's just doing awesome. So anyway, the designer and the builder of this infrastructure, and thank God it looks like it's humming along here really nicely now. Super pleased to see what's coming up on my daily emails here. And I'll be, pleasure to show you these signals over the coming months. But we have Mr. Sjord on the call here for our after party. He obviously is going to weigh in on what he sees going on fundamentally in this space. And if anything, maybe that'll give us an opportunity to pop on over to altcoin land and see if we have any new developments in any of the names that he's interested. Quite a nice basket of names that I actually think So we're even thinking about creating a special report for all of you about TRI's favorite top cryptocurrencies now. But yeah, maybe look for that down the road here. But if anything, like I said, it'll be a really good opportunity to check back in with Mr. Fjord and see what nuggets of wisdom he can add to the equation here this morning. So what do you think? I do see that he is in the Zoom call ready to go. You ready to rock these people's world here, Mr. Fjord?
Yes, I'm struggling with the green screen, but let's see.
Oh, cool. Now he's got a green screen too. Awesome. I haven't even talked to Stuart because he's been on vacation for a couple weeks. So I'm super excited to hear what he has to say too. So on that note, you good people, have yourselves a great rest of your day. We'd love to see you over in the after parties. I think, hell, the after party videos between people like Sjord, Julian, myself, all our special guests that we have on, Marat just totally killed it past couple weeks. People absolutely loved his reports. I think that's worth a basic site subscription alone. But why don't you come on over, sign up for the 3 free 30-day trial? I mean, hell, it won't even cost you. And you tell us whether you think these after party reports are of value. We'd love to hear back from you. All right. All the best, everybody. PMA for the win. Slow and steady wins the race. Don't take no win nickels. Remember what your number one job is. And of course, PMA for the win. Have yourselves a great day. Bye.